Hi, everyone. Welcome to your latest Carson's Take 5 with Ryan and Sonu. Sonu, we're going to title this one, Will There Be Any Pre-Election Jitters? The election is less than 3 weeks away. Stocks have been pretty strong overall, but you know what? Will there be? That's the question, Sonu. Will we finally see stocks pull back a little bit as we get anxious in front of that election?
No, it looks like, well, I think they're pre-election. We're talking about the markets, so we should be clear, right?
Good point. There's always jitters. We're talking stock market. You're right.
We're talking about investors here. Look, one way it kind of shows up, like, look, the market's hitting record highs week after week, maybe day after day. The day we're recording this is October 15th. The market's down a little bit. But after hitting, the 46th record
46
high?
of them.
Yeah, 46th record high of the year, which is, we're on track for maybe the most ever or something, right? But where it's actually showing a pre-election jitters is in volatility, right? And, without getting too technical about this, there's this thing called the VIX index, which is like the fear gauge. It measures what, option traders, people buying hedges and things like that, believe volatility will be over the next 30 days for the S&P 500. And it's essentially the fact that it's going higher tells you more people are buying hedges, right? So there it's sort of, to your question about, will there be pre-election jitters? I think there are jitters and people are buying hedges for that.
Yeah, and that's not, that's not necessarily a bad thing, right? I mean, if everybody's thinking alike, somebody isn't thinking journal pattern. So a lot of people are hedging.
Buying insurance. That means insurance may be a little overpriced here.
Yes, but it's still going to happen. I mean, I know we talked about this last week a little bit, but the S&P is up 5 months in a row. The S&P 500 is up 10 of 11 months. We're looking at like the best returns for an election year we've ever seen. All right. So to think that we're just going to be unscathed and you've got the election, obviously some jitters. We've seen jitters before. By jitters, we're talking some weakness, some equity weakness out of the last couple elections. Obviously, Sonu, October, everyone knows October's pretty darn volatile. All right. October 19th, 1987 was the crash. There have been a lot of other big crashes in October. We're not expecting a crash. I'm just saying people know it's volatile. Oh, and then the Middle East. Obviously, every day things are swirling in the Middle East. So you've got the Middle East, an election, October volatility. All these things say, hey, maybe there could be a little bit of volatility. One more thing, Sonu, I'll turn it to you. When you're up 20% for the year, like we were in the S&P this year, going into October has only been higher 2 out of 9 times, down about 3% on average. Not the end of the world stuff, but just to be aware that, listen, it's been a heck of a run. Maybe we could see some well-deserved volatility and a little bit of a pullback. But that's the question. So how big of a pullback do you think we have, if we have one?
I honestly don't think we'll get anything more than like 5%. Famous last words.
Yeah, that's true.
But look, we're getting into earnings season as well. Right. And the outlook for earnings and future expected profits look pretty good. We're going to get Q3 GDP data next week, I believe, and that's going to probably look somewhere between 2.5-3%. Strong, right? Irrespective of what that exact final number, which will also likely get revised too. But it's, the economy is doing well. Profits are running strong. So there's a reason why markets are running strong. You mentioned the 1987 crash. I mean, markets are still positive even after the crash for 1987, which is always interesting to me, despite that big crash, right? But over the prior several years, markets had run up because valuations were stretched. Like that whole entire run up in the mid 80s for the bull market in the 1980s came without profit growth. It came on the back of valuations increasing. So that's when we talk about a rubber band being stretched. We're not in the middle of that right now. That's not what's happening right now. Markets have been going up on the back of profits.
No, that's a beautiful thing, obviously, to justify kind of where we are. Also, you look at history, like when do markets peak? Historically, is when people are optimistic. People are feeling really good. There's a lot of ways we can measure that, but I'll just look at consumer confidence. Consumer confidence, looking at various polls that are out there. So people aren't feeling that great still. I mean, this is one of those rare times where the stock market's doing well. Honest to goodness, everyone, the economy, it's not perfect, but it's doing pretty darn well also. But people simply aren't feeling good. So I think we probably will continue to rally until we see people feeling good. And I've said it before, you need bulls for a bull market. It's okay to be bullish in a bull market. Once you get over the top, like 2021, I'm looking at you, everybody got some money from the government, everybody opened up a day trade account, everybody's trading, doing this, doing that. That felt a little frothy. And then 2022 came along, one of the worst years for stocks we've seen, but it was also one of the worst years for bonds we've ever seen. So sometimes you got to pay the piper. You get a little too excited. We're not seeing too many people day trading right now, too many people excited with the stock market, which again, from a contrarian point of view, probably means this bull market has more time left. What do you think?
No, absolutely. It seems like stocks are continuously having to climb these walls of worry.
Yeah,
Is that a phrase?
I
Walls of
think so. I think walls of
worry.
worry. I like it.
But, and the election is yet another wall of worry. And then I think once we clear that, simply because of the fact that like people are buying a lot of hedges and that's going to come
Mhm.
off, I think that's going to put some upward pressure on markets. It doesn't mean it will happen, but the odds are stacking up for a good fourth quarter here, even especially post election.
Well said. I'll kind of wrap it up like this. We talked last week about how the bull market is officially 2 years old now. So happy birthday to the bull. When you go back 50 years, Sonu, and you have a bull market that makes it to its second birthday, some of them do make it to the second birthday. So once you get mature enough to the second birthday, the last 5 bull markets, every one of them made it at least 5 years. Average is like 8 years. Okay. So every time can be different. There's lots of things to pay attention to. But I think the key thing we're really trying to stress here on the Carson team is this has been a great bull market for 2 years, getting up over 60% the last 2 years in the S&P. Just because we've done that doesn't mean it has to stop tomorrow or today or the next week. And we don't think so, right? We still think this economy is strong and a surprise to the upside going forward, well into next year. So this bull market likely is alive and well. But again, to answer the question, will there be some pre-election jitters? We think there could be, right? We think there could be some scary headlines. Might be an October surprise. We've seen it before. We'll probably see it again. But like Sonu just said, a lot of people are kind of hedging against that. And maybe on the other side, once we get through the event being the election, get through the election, realize the world did not end. Whatever happens, happens. The underlining pennies of this economy are still strong, and this is still a bull market. So with all of that, everybody, this is your latest Carson's Take 5. We'll see everyone next week. Thank you. Take care.